Welcome to part 2 of our series on challenges organizations face with the design of their journal entry controls. This is the second in a series of videos where I will discuss risks related to how your journal entry controls could be undermined. I would encourage you to review our first video, which is available on our YouTube and LinkedIn pages, as well as our blog. Please consider following us on YouTube and LinkedIn to receive notifications for additional videos as they're released. Links can be found at the bottom of our homepage, the very bottom on the left. The first question you need to ask when talking about the scope of your journal entry controls is, how does an organization define the sources of what should be subject to the manual or non-standard journal entry control? In our first video, how one configuration can undermine your manual journal entry controls, we talked about a specific risk that the configuration of journal sources could cause a problem with journal entries interfaced from other systems and journal entries transferred from a subledger. In this video, we will explore one way the control design can be undermined using subledger accounting privileges that would bypass the control. Here's a simple diagram that shows the ways journal entries flow into the general ledger. Journal entries flow into the GL from subledgers, other systems, and via FBDI uploads. Most organizations define their control over journal entries to focus on manual or non-standard journal entries. Typically, the journal entries management includes in their control population are those that are uploaded via the FBI template, which is an Excel spreadsheet, or those that are entered manually through the application. Journal entries coming from subledgers such as payables and receivables are not included in the population of journal entries. What happens practically is that the journal entries coming from these subledgers are posted without reviewing them for their completeness and accuracy. They are excluded because management is relying upon the controls within the subledgers. Payables invoices are approved via workflow or matched via a purchase order that was approved. Controls over revenue and other transactions within the receivables module also have specific controls management has implemented. Therefore, journal entries from these subledgers aren't reviewed. They're often auto-posted. Now let's look at the topic of the video, the risk that a manual journal entry can be created using privileges that could mimic a journal entry coming from a subledger. What sources of journal entries are subject to the journal approval process are defined in the journal sources configuration. Those that are required to go through the approval workflow have the required journal approval workflow flag checked, in essence set to yes. You can see in our screenshot that autocopy is checked and assets is not. This means journal entry with the source of autocopy would be routed for approval via the journal entry approval workflow, and journal entries with a source of assets that is transferred from the assets module would not be sent through the JE approval workflow. Because of the reliance on controls with the various subledgers, we normally see all subledgers unchecked such that the journal entries would not be subject to the journal entry approval workflow. Now let's further look at this risk. Let's look back at this diagram. What Oracle has provided is the ability to enter a manual journal entry that could use a source that appears to be coming from a subledger, such as payables or receivables. If someone were to prepare a journal entry and that journal entry was not subject to the journal approval workflow, they would effectively be bypassing the controls over manual journal entries. Up to and including patch level 20B, we have identified 3 privileges that allow this type of journal entry to be entered. If one or more users were to have access to one or more of these privileges, an auditor should ask the question, are these privileges assigned to anyone and have they been used? If they are assigned to someone, they should ask the question, have they been used? Differentiating between these types of journal entries and journal entries that come directly from subledgers would be difficult, and we haven't identified any reporting that would allow us to identify if they have been used. Therefore, it is critical that these privileges not be assigned to any users. It is critical that any role that contains one or more of these privileges not allowed to be assigned to any user. Up to including patch level 20B, there are 25 seated roles that have access to one or more of these privileges. If you'd like to know with certainty which users and roles have access to one or more of these roles or these privileges specifically, we will analyze this risk at no charge for you as part of a free assessment over your role design. Please contact us at info@erpra.net for more information. Next, you need to put a process in place that regularly tests such access through a service that we can provide or a GRC software solution with a mature sensitive access rule set, such as our ERP Armor rules offering. Our recommendations. First, evaluate your currently assigned roles to see if anyone has access to these privileges. Next, customize any role that has access to these privileges and remove access to them. We always recommend using fully custom roles. Please watch our webinar on this topic. It is called ERP Cloud Role Design Best Practices and can be found on our YouTube channel. Continuing our recommendations. Unfortunately, Oracle doesn't allow us to disable these high-risk seeded roles from being assigned. We have asked for an enhancement request to provide the ability to disable roles, but Oracle hasn't provided this ability yet. This leaves us in a position of having to get the user provisioning process perfect. The first thing you need to do is revisit your user provisioning process to try to prohibit any of these seeded roles from ever being assigned. Do not allow users to request access to these specific roles. Second, because of the operational and audit risks related to these privileges, we recommend proactively monitoring your user provisioning process by reviewing the platform security services logs on a regular basis. What we're looking for is to make sure that no one is assigned one of these 25 seeded roles. And of course, this list may need to be expanded to include any custom roles that have these privileges as well. Our final recommendations, you also need to regularly test your role design. No less than monthly is what we'd recommend. If you have licensed GRC software, the sensitive risk should be tested at the time of the provisioning as well, as long as other sensitive access risk and segregation duties conflicts. Also, consider that an Oracle patch could add one or more of these privileges into an existing seeded role, or what we refer to as a hybrid role. A hybrid role is a custom role that uses seeded duty roles. You need a process that tests this as part of each quarterly patch. We have a cost-effective service that can provide this information, something we call ERP Armor Patch Impact Analysis. This service also provides you with an SOD sensitive access scan on a quarterly basis, so you have visibility into these risks after the patch is applied. Contact us at info@erpra.net about our services or any questions you have related to this video.